Bitcoin, the world's first and most famous cryptocurrency, has always been a subject of fascination for investors, traders, and tech enthusiasts alike. Its volatile price movements create waves in the global financial market, often sparking debates about its true potential. In recent years, artificial intelligence, AI, has entered the fray, promising to predict Bitcoin's price with remarkable accuracy. But as the hype around AI-driven price predictions grows, questions arise. Is AI really capable of predicting Bitcoin's unpredictable nature? Or is this just another case of technology overselling its abilities? In this video, we'll explore the intersection of AI and Bitcoin price predictions, looking at the methods, the successes, and the failures. We'll also dive into the key risks and challenges that come with relying on AI in such a volatile market. Is AI the key to making the perfect Bitcoin investment, or is it too good to be true? Let's find out. The impact of market volatility on Bitcoin predictions using AI. Bitcoin, launched in 2009 by the pseudonymous Satoshi Nakamoto, has been known for its extreme market volatility. In just a decade, Bitcoin's price skyrocketed from a mere $1 in 2010 to over $64,000 in 2021, only to crash down dramatically at times. This volatility has made Bitcoin both an exciting investment and a risky one. With the rise of artificial intelligence, many experts believed AI could predict Bitcoin's price movements with remarkable accuracy. However, this volatility poses a major challenge. For example, in 2017, Bitcoin's price surged from $1,000 to almost $20,000 in just a few months, driven by speculation and hype. AI models, while analyzing historical trends, struggled to keep up with the speed and unpredictability of such market swings. The unpredictable nature of Bitcoin, driven by external factors such as regulatory news, media influence, and sudden global events, makes it nearly impossible for AI to consistently predict its price. Bitcoin's volatility continues to challenge AI's potential, proving that sometimes technology may not be enough to predict the unpredictable. The role of data quality and availability in AI predictions of Bitcoin prices. One of the key factors that determine the accuracy of AI predictions for Bitcoin prices is the quality and availability of data. AI models, particularly those used for financial forecasting, rely heavily on historical data to identify patterns, trends, and correlations. For traditional markets with long histories, this data is abundant and reliable. However, Bitcoin's relatively short existence since its launch in 2009 presents a unique challenge. The first recorded Bitcoin transaction took place in 2010, and the market was almost entirely unregulated for several years. During this early period, Bitcoin's value was almost negligible, making it difficult to gather meaningful data. As a result, many AI models are forced to rely on limited data from 2010 to 2017, when Bitcoin began to gain real traction. This creates a gap in the data, where models may not have sufficient historical context to understand significant market shifts or the impact of regulatory changes, technological advancements, or macroeconomic events. Kneeling for Bitcoin's market data is highly fragmented and often unreliable. For example, the cryptocurrency market is dominated by various exchanges with different liquidity levels and trading volumes. This can lead to discrepancies in price data, making it difficult for AI systems to create consistent models. Additionally, the data AI relies on is often not just limited to price, but also includes sentiment analysis from social media, news, and forums. These are more difficult to quantify and can be misleading due to the high influence of rumors, speculative trading, and misinformation. In 2020, Bitcoin experienced an unprecedented surge, pushing its price to new all-time highs. AI models trained on historical data failed to predict the scale of this increase, largely because they couldn't factor in the influence of global events such as the COVID-19 pandemic and its economic fallout. Similarly, Bitcoin's recent price drop from $64,000 in 2021 to under $30,000 in 2022 baffled many AI predictions, which were based on flawed data assumptions. The limited and sometimes flawed data available makes it clear that Bitcoin price predictions using AI may not always be reliable, especially when predicting long-term trends. Data quality, along with availability, will remain a significant hurdle for AI models striving to forecast Bitcoin's notoriously unpredictable price movements. The challenges of overfitting in AI models for Bitcoin price predictions. One of the most common pitfalls when using artificial intelligence to predict Bitcoin prices is overfitting, a phenomenon where an AI model becomes too closely aligned with historical data, making it unable to generalize to future market conditions. Overfitting occurs when an AI algorithm learns not just the true patterns in the data, but also the noise and irregularities that are specific to the training set. This leads to a model that works well with past data, but fails to predict future outcomes accurately. In the case of Bitcoin, overfitting is especially problematic due to the volatile and erratic nature of its price movements. Bitcoin's price history is marked by sudden spikes and drops caused by various factors such as investor sentiment, global economic conditions, and regulatory news. For instance, in 2017, Bitcoin's price surged from $1,000 to almost $20,000 in a matter of months, only to crash back down shortly after. A model that was trained on data from that period might learn to expect such sharp fluctuations, but would likely struggle when the market stabilizes or behaves differently in the future. AI models that are overfitted may rely too heavily on patterns that were only temporary or specific to a particular market environment. For example, if the AI model used data from 2017 to 2018, when Bitcoin was highly speculative and driven by mass hype, it might incorrectly predict a future price surge based on similar signals, even when the market dynamics have changed. The unpredictable nature of Bitcoin's price can often mislead AI models into thinking that a certain trend or pattern will continue indefinitely, which is rarely the case. In 2020, during the global economic uncertainty caused by the COVID-19 pandemic, Bitcoin experienced massive fluctuations in response to market panic and subsequent recovery. AI models trained on pre-pandemic data were ill-equipped to predict the sharp price changes driven by external, unpredictable factors. This example further highlights how overfitting can cause AI predictions to fail when unprecedented events occur outside the scope of past data. External influences on Bitcoin price predictions. One of the key challenges in using AI for Bitcoin price predictions is accounting for external influences that can drastically affect its price. Unlike traditional assets, Bitcoin's value is highly sensitive to news, global events, and public sentiment. In 2021, for instance, Bitcoin's price surged when El Salvador became the first country to adopt Bitcoin as legal tender. However, the market's reaction was unpredictable, with Bitcoin's price dipping shortly after due to regulatory concerns in other countries. In conclusion, Bitcoin's unique characteristics make it a tough asset to forecast accurately, even for advanced AI systems. Although AI can assist in identifying patterns, it's clear that human judgment and a deep understanding of market dynamics will always play a crucial role in navigating the unpredictable world of cryptocurrency.